Welcome to the Capital Spreads Weekly Update. Today is Thursday, 22nd of September 2011, and the week so far, well, it looks like there seems to be a perfect storm in terms of both negative and bearish news, with the bulls having very little to go on at the moment. Amongst the arm length worth of negative news at the moment includes the fact that Italy's recently been downgraded and there's questions over whether it can maintain its debt. We've also now got assumptions that Greece will basically default on its debt and the repercussions of which are still being calculated and anticipated. We also have had French banks being downgraded, with many rumours going around that they still continue to hold on to quite toxic unrealised loans, both from Spain as well as Greece. In addition to that, we've had a trader in London, a UBS trader, who managed to lose £1.3 billion, and that has provided the regulators with further ammo in terms of red tape for banks, as well as further restrictions on their business activities. We are now having concerns over whether China is slowing down, and finally we had comments out of the US Federal Reserve yesterday which highlighted the downside risks being far greater than previously anticipated, and there's assumptions that there's still worse to come. As a result of that, we've had a massive sell-off across pretty much all asset classes, with the exception of US dollar and US treasuries, which have rallied as they have recently as well as traditionally been used as safe havens. So looking at the markets as they currently stand, we have the FTSE trading on 50.25. It's down about 250 points in the day. We have similar falls in both the Europe with the DAX, as well as in the US with the Dow and the S&P. Now again, it's very much a highlight of the fact that we could possibly expect a lot worse going forward, and there's still some worse negative news that hasn't been factored in. The FTSE, for example, has support around 5,000, but however, that is just psychological. You're looking at stronger support around 4,800. However, many people are even now wondering if Greece does default, whether we can actually go back to the credit crisis lows that we had just a few years ago. On the upside, if the FTSE does manage to find stability around here, you're looking at resistance possibly around 5,400, and then stronger resistance around 5,500. Looking at the commodities, you've got gold currently trading around 1737. It's come off by about $70 just today. Now, gold has been very volatile over the last few weeks or so, and today seems to be no exception. The sell-off for the gold that we've had today has been twofold. Firstly, we've had a strengthening in the US dollar, and secondly, we've also had a rumour that a certain European central bank, which has remained anonymous at the moment, has been selling its gold reserves in order to meet its shortfall in liquidity. Now, both those has led to gold coming up very aggressively. We're looking at supporting gold around $1,700, which is where it fell to last time, before bouncing very aggressively and going back up to all-time highs around 1914. If it falls beyond that, you're looking at support far lower than that. On the upside, you're looking at resistance around 1800 again, 1850 possibly. If it does bounce and gold gets used as a safe haven again, people are still anticipating gold to hit possibly $2,400, which has been the inflation-adjusted all-time high that we hit back in the late 1970s stroke early 1980s. In terms of the week going forward, we don't have much in terms of political news. We don't have much in terms of economic news. Much of the market movements at the moment seems to be very much driven by both political as well as sovereign news. So for example, the uncertainties over Greece as well as Italy coming into focus. People still are looking at other peripheral European countries like Portugal, for example, and wondering whether we will have a domino effect. A couple of economic data releases to keep an eye on over the next few days will be firstly the German IFO figure coming out on Monday. Now, Germany being the biggest provider to the European Union, any slowdown in business sentiment and sentiment in Germany will certainly have a quite broad impact on the Eurozone, and will further add to the problems we have there. And on Tuesday next week, you have US consumer confidence. Again, we're expecting that to take another tumble, and will add to further downside pressure on the financial markets. In terms of client activity, given the sharp falls we've had over the last few days or so, we're looking at clients buying quite strongly into both the equity index markets, into the gold markets, as well as into sterling dollar and euro dollar. Now, many clients are actually expecting them to bounce, considering that they have fallen quite sharply just over the last couple of days or so. In terms of a theme of the week, I would say the theme of the week very much would be the sudden, sharp, bearish turn we've had in the financial markets. Now, this seems to be in very stark contrast to the rally we had just towards the end of last week, where we had the DAX and the FTSE putting on 200, 300 point gains in just a few days or so. It was anticipated towards the end of last week that there might be some stability stroke resolution to the problems we had in Europe. However, that seems to have all been blown away, in particular by the comments by the Federal Reserve yesterday, as well as the slurry of negative news we've been having over the last few days or so. That's it for now. As usual, if you have any feedback, it's media@capitalspreads.com.